in terms of raising capital for your startup, or if you're in a business and you want to raise some money to start building this new product line of yours or service line, whatever the case may be, you're going to be looking at ways to raise capital, right? So unless you've got the money on hand, which is, and even if you do, is it always best to spend your own money, or is it better to leverage debt or leverage someone else's money to build your business up? There's arguments 2 and 4, but I think you'd want to know what your options are at least, right? So there's 3 options for you. Number 1, the one that grabs all the headlines. Is that big enough? Let me write that bigger. 1. Equity. Now, equity is what? Equity is someone buying into the entity. They're buying into this. They're taking ownership of something in your business, right? They're buying shares. They're buying the land. They're taking ownership at a certain value cap. That's what equity is. And they get all the headlines. The big VC companies, right there, when they buy like $600 million into Uber or something, it takes all the business media headlines. And if you Google anything to do with business, it's always showing up, right? So these are the people that are buying into other businesses. The second one we all know are loans, right? Standard debt instruments. This supports 99.9% of businesses. Most companies start with a loan, right? You get a business loan, 10 grand, 20 grand. You get your website together, you start the thing. That's how most businesses are started up. It's also how they're kept in business going forward. So loans is another big one. We're going to talk about that. And the third is, you may not know this, bit long, convertible notes. Basically, convertible notes are the third option and happen to be a mishmash between loans and equity, in the sense that they start off being a loan, and at the end of that term, depending on whatever triggers it, it would convert to equity. Now, I'm going to go through each of these. I'm going to give you pros and cons as to which direction you should go as far as your own business capital raise is concerned.